to your daily Forex trading strategy session. My name is Wayne McDonell. I'm the Chief FX Market Strategist for TradersWay.com, an ECN that allows you to trade not just Forex, but if you want to get on the oil bandwagon, we got that for you. If you want to trade the DAX, adding up the quantitative easing from the ECB, we got that for you too, huh? You want to hedge the whole thing or maybe scalp? We got binary options for you. Everything to make you successful, healthy, wealthy, and wise. I'm the one that helps you be wise. The rest is up to you. We do these sessions in the morning, give a couple of hours before the New York Open, before the Equity Open. Good time to do a strategy. Oh, YJ, YJ bought a 4K 28-inch 400. Get this. I saw the deal of the century, YJ. I was looking at it on the weekend and it sold out. The sign was still there. 65-inch 4K TV for $1,000. Oh snap! Well, that was a $15,000 TV about 18 months ago. I'm like, oh no, I missed it. I missed it. You got 2 of them already? Yeah, good for you. So, hey, let's get going. We have some fundies to do and some technicals to do. It's a Monday. Let's plan the week. Oh, Sammy Bo says, Wayne, do you use weekly pivots only? No. No, I love daily, weekly, and monthly. And I like to look for clusters where they overlap. Yeah. So let's get going. Mr. Froto like pivot points. Hey, trading is risky. You might lose money. If you lost money on Friday, however, it doesn't mean on Monday you'll lose money. Past performance does not predict future results. Because of this risk, it's not appropriate for everyone. I say stay small, stay humble, focus on the long term, never risk money you cannot afford to lose. Yeah, you know, pivot points, it's amazing when you first run into them. And you say, oh, these look interesting, they might be helpful. And then when you see how powerful they are, you feel like, I don't know, kicking a puppy. And boy, that's not a good feeling to have, is it? You're like, oh my gosh, how come I haven't been using pivot points before? And by the way, kicking puppies is wrong and just hurtful. But doesn't mean you can't feel that way from time to time. They are definitely important, and if you haven't been using them, you probably have learned the hard way, right? Now let's talk about pips, baby. Let's talk. Tough day, huh? Tough day. I'll tell you what. I was up, 2 something in the morning, ready to pull the trigger. Okay. And let me get my drawing tool. And perfect entry. Beep, 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 beep. Perfect entry available. Right on time. Let me get the drawing tool here. Hang on. Okay, perfect entry, right on time. Bada bing, bada boom. Pull the snap. Look at all the money I have already. I think I'll go to bed. Anybody run into that? Yeah, and I'll wake up and I'm like, what? Welcome to the summer. That's typical summer trading. Some are good, some are bad, right? Um, yeah, that's just how it goes, yo. Which means if you entered late, you got punished. And if you entered perfectly, you got a small profit. Or break even or something, right? But it was, you know, I guess it was fun while it was lasted. But I'll tell you what, if you're a sloppy trader in days like this, you do tend to get punished. So my setup on my trading computer is a little different. It's funny. I'm measuring a different time frame on my other computer, but this was an entry. Yeah, for some reason it's not on this computer, but on my other computer that is a positive entry. So it was perfect down, which was really nice, and then it died. Wah, wah, wah. But if you entered late, you probably got punished. Like, you know, if you shorted here instead of here, there's a big difference, right? If you were really late in the game, like you were in between time frames, hang on, I'm looking at this. Maybe it's the other one. I forget it, but whatever. If you entered super late trying to short this and short the pullbacks, you also got caught, right? And that's because you're trying to catch sloppy seconds. I wouldn't blame you though if you were looking for something like this. There's nothing wrong with that. You may not have gotten an entry though. There's a little bit of consolidation might have thrown down a trade, but whatever. So I'm just saying, why the first entry? You know, I'm looking at it on my other computer. I just was trying to explain it. And I have it set up as a short here on my other computer. One of the things it's doing differently, though, is you notice this yesterday's high, yesterday's low. I think it's on a different time frame, so it's using a different high or a different low. And it's giving slightly different retracements, but this is an entry. Just the way I have it set up on my other PC. Why? I don't know. What can I say? But it was glorious. Because the interesting thing is, it was just like minutes. Pull the trigger, and you know, half an hour goes by, and you've hit a home run. So, oh, was I buying? No, was I buying? Oh, maybe it's. Yeah, you know, I don't know why it was an entry. It was though. But anyways, so we're caught here. So that's that. And all I want to bring it up is that if things have not been going very well over the last, I don't know, 2 or 3 weeks, remind yourself that we predicted that that would happen. That from about the second week of July to about the second week of August, we would get trading like this. Now, in fact, trading's been better than I thought. So sometimes that's good, sometimes that's bad, because, you know, but whatever. I hope you survived. Also, probably next week the markets are going to warm up again. Okay. Sam, could you please share your view on DAX? All right, where were you last year, Sam? Here's my outlook. The EC is doing quantitative easing by the DAX. There we go. Let's start with this is Forex.today, who's hosting our webinar. Let's start with the commitment of traders report, and then we'll do the calendar, and then we'll do some technical analysis. What do you stink? Smell like a plan? Okay. So one quick thing, Sammy. Why would I be so nonchalant? Why would I say quantitative easing by the DAX? It has nothing to do with the economy improving. Quantitative easing increases asset prices. That's it. Now we could talk about improving economic conditions later, but quantitative easing increases asset prices. That's what it does. That's why it's doing it. Well, even then, I mean, it's sort of one or the other. It's just you need more euro to buy anything. So it's just, that's it. So when a central bank announces quantitative easing, you buy the stock market. That's it. That's why. And then we could talk about the true fundamentals later. But cause and effect, that's it. I begged people to buy I begged people to buy the Spanish stock market when it was at a 786 retracement from the top. And I asked people, I said, do you believe that the entire Spanish stock market is going to go to zero? Every Spanish company will be completely insolvent. People said, no, of course not. I said, well then, buy Spain, buy the entire Spanish economy at 80% off and put it in your will. Never let it go. Let your grandchildren fight over it at your funeral. Okay? Why? The ECB was going to do whatever it takes. That's why. All right, so let's go through here. Yeah, Ron was there. Can I show the Spanish stock market? No, I don't want to do that. All right. Boop, boop, boop. Let's get going. All right, this is Euro. And you can see right here, this is last week. It's information. The commitment of trader report. This is specifically the non-hedging Forex positions, which means they're speculative. Let's call them hedge funds. This is the smart money, I think. Now, a lot of people argue it's not, but whatever. And okay, so let me open this up, see if we can get a little more data on this. And this data is released by the Commodities Futures Trading Commission Friday after the close of trading for the week of the 10th of August, which is last week, released on compiled on Tuesday, but released Friday after the close. Okay? And it's from Tuesday to Tuesday last week. Okay? All right, so what's going on? Nothing. So if you're frustrated with your trading, maybe you have the wrong expectations. Remember, I've given you permission to shoot at rabbits. There's no need to set up traps for, large trades. You're not likely to catch anything. So when you're shooting at rabbits, it's not much, but at least you can eat, right? It's kind of important. Starting next week, I want you to start setting up traps for big game. Yeah. Gregers is all over that. So anyways, this is Euro USD. This is the net change in long and short positions. Check this out. This is people buying euro. This is people selling euro. Woo-wee. That's why Marina's saying, that's why I don't trade that. Beep. Let's talk about euro, baby. Let's talk about you and me. All right. Hey, Vipul. Okay. Pig. Let's talk about pig. These are people going long. Sorry about that. I'll clean that up. Less people long week over week. Huh. And no change one way or the other in people shorting. Less people long, same people short, slight drop in net positions. And you can see the market is actually quite neutral, isn't it? This is the water line. So I'd say even neutral for now. But remember, it's your job to kind of think ahead as well. But market's pretty neutral here. Was it neutral on euro? Let's contrast the two. I would say the market is still quite bearish on the euro. Okay. Was that about 120,000 contracts short? Yup. Okay. So euro is more bearish than British pound based on actual reportable positions reported to the CFTC. So remember, if you're a large institutional investor, you have to report your positions. So these aren't like trading ideas. This is money in the market. And with euro, if you add up all the long contracts and all the short contracts, there's like 120,000 contracts. Short, more, there's 120,000 contracts, short contracts, more than all the long contracts added to it, right? So the net, you add the longs, the shorts, there's 120,000 more shorts than there are longs. So the market is still quite heavily short, but what we're looking for is an increase in shorts or a decrease in longs or both. Okay? Genius, genius, genius. So that market is still poised to head south, if you ask me, and I think you just did, so that's what I did. I reported what I think. All right, yen. How's Japan doing? So it's actually not weird. You have Kuroda, who's doing a fine job managing quantitative easing. All right, so if the Bank of Japan's doing a good job, who's screwing up? Since since the Bank of Japan has been spending hundreds of trillions of yen, why don't we have inflation? Who's screwing it up? Well, Igor goes way farther back than that. The government. Abe is the worst thing to ever happen to Abenomics. Like I said last week, you know, one possible outcome of all of this is Abe gets fired. Now, I'm not in Japan. I'm not Japanese. Hey! But I can tell you, it's the government that's screwing everything up. For example, they announce quantitative easing. They start pumping money into the economy. And what does the government do to help out? Jack up taxes. Well, is that good for the economy or bad for the economy? Does that increase, product? I mean, what? It's bad, right? Bad, very, very bad, bad. So, like, what kind of idiot is in charge? Now, most likely Abe had to do it because of other idiots in the government, but that's like a dumb move, right? Like, stupid, right? Like a 5-year-old would understand that. Why would you give somebody a bunch of money and then say, "Oh, by the way, give me some of that back"? No, it doesn't. No, we're economists. We're not politicians, Michael, right? So you print money, let's say, to use lay terms, pump money into the economy to spur the economy, to create inflation, and then all of a sudden, wham, you hit the economy over the head by jacking up taxes. What the hell? I mean, just dumb beyond belief. So, I don't know. Here we are. And some would say, even though we call it Abenomics, that Abe's been distracted, doing everything except, because remember, let's step even farther back. Okay? Let's step even farther back. What happened in Japan was amazing. I really thought it was going to be an amazing result. That Japan was doing something that no other country had ever done before, and it was revolutionary. It was almost ridiculous to think that it was possible to do, and they did it. And I was really, really, really proud of the Japanese for a very small window of time. And here's what they did. Abe runs on a political platform of doing whatever it takes to get Japan out of recession. Whatever it takes. The only thing the only thing he ran on was, I will fix the economy. You elect me prime minister, I will fix the economy, and I will be radical in what I do. Right? Okay, he gets elected. Then replaces the governor at the Bank of Japan, so that the Bank of Japan will work with the prime minister to do whatever it takes to get Japan out of recession. The lower and upper houses of parliament, sort of like Congress and the Senate, also hold elections, and everyone gets elected on the one idea of work with Abe to do whatever it takes to get Japan out of recession. Now, of course, it's not one election, it's a couple of elections, right? I mean, it's a big deal, like getting the President of the United States, the President of the Fed, Congress, and the Senate all working together to do one thing. Any Americans in this room? I mean, that's inconceivable, isn't it? I mean, it's absolutely inconceivable. I mean, beyond a dream or something, it's almost stupid to even think it. But Japan pulled that off. And I thought, amazing. They're going to do it. They start with quantitative easing at unprecedented levels. They're like, wow, they're doing it. It's incredible. And then, wah, 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 epic fail. What the hell? You're jacking up taxes? And, oy vey, what a bunch of dum-dums, right? And, well, here we are. It's been what? How many years now? 4 years? They still have negative GDP? Well, yeah, that's what you get. It was a good start. They screwed it up. And that's it. It was a good idea, and somebody screwed it up. Literally. Threw away the future of Japan. Because what are they going to do now? Right? If Abenomics doesn't work now, what's their next plan? I mean, right? What, they got something better than Abenomics? I mean, it was their, I don't know. That's it. I don't know. They better get the government involved. And, there was never really any, there wasn't major changes at the government level in spending, debt reduction, and closing loopholes, and exposing corruption, and adding efficiency to systems. And, the government side of the equation, there wasn't anything radical going on there. All they did was quantitative easing, right? Oh, that's all they did. But wasn't Abenomics supposed to have, 2 other legs? So they just wimped out. Abe didn't hold up his side. The Bank of Japan did what they were supposed to do, and Abe didn't hold up his side of the bargain, right? Yeah, what did they actually do? Yeah, they screwed it up. They did the opposite. You know what they were supposed to do? Lower taxes. Increase efficiency. They should have done this. Contacted all the major employers of Japan and say, or even all the small businesses, or whatever, and say, look, for every 1% increase in wages you give your employees, we'll deduct 1.5% from your taxes. How about that? I'm the Prime Minister of Japan. So I go to Sony and I say, Sony, if you give all your employees a 10% wage, we'll give you a 15% reduction in taxes. See, let's back out even farther. Why is quantitative easing not working? Not just in Japan, but even in the United States, it really hasn't done much. And there's a logical reason why. Quantitative easing increases money supply, right? So who cares? Where's the money? Guess where the money is, guys? The money that the Fed handed out is at the Fed. It's not even sitting in the banks. Where do the banks keep their money? At the Fed. So here's the thing. Banks had billions of dollars of loans. Now they were efficient, like a lot of them were loans that were, most people did pay their mortgages, right? Most of the mortgages were quality mortgages. I mean, there were subprime, there's no doubt about it. But let's say you cut out your subprime and you took those losses, and that's what lowered the overall market, because your portfolio is marked to market, not marked to what you paid. So now we're getting a little technical. But the loans were performing. In fact, Bear Stearns, something like 99.2% of Bear Stearns' mortgage portfolio were performing. And they went out of business. Wasn't even their fault. Bear Stearns wasn't a bunch of scumbags. Lehman probably was. But they, anyways, so these loans were performing. Because you can't grow government. Yeah, you can't. Michael's funny. So anyways, they had good loans, and the banks were at the point where they didn't have enough money. I mean, they owned assets, but they had no cash. That means you're insolvent, right? But like if the banks just shut their doors and said, all right, we're no longer a bank. We're just going to hold these mortgages, they would make a lot of money. Okay? But the problem is they are banks. Whose money is tied up in the mortgages? The depositors. So they're in this conundrum, right? So just to balance the balance sheet, the Fed loaned $2 trillion to the banks. So now the banks had enough to solve it. The mortgages are performing. They are collecting interest every single month. At the end of 30 years, they'll almost double their money. Is that right? 85. At least it's not 45, right, John? So anyways, so what happened to the $2 trillion that the Fed gave to the banks? The banks put it on their balance sheet as excess reserves deposited where? At the Fed. What? The Fed gave the banks $2 trillion and the banks gave it back to the Fed. Yay, nice trick. Nice trick, huh? But now the banks were balanced. Bravo. So now, what about the giant money supply and this huge balance sheet at the Fed? What do you think's going to happen? The Fed's going to sell those mortgages back to the banks, and the banks are going to use the money that's parked at the Fed. So they'll buy the Fed's bonds, shrinking the balance sheet at the Fed with the money the Fed gave them, which is parked at the Fed anyways. And the balance sheet goes down, and now the banks are holding the assets. And everyone's like, oh, the Fed's balance sheet, oh, the money supply. Well, look, if it's not put in the economy, nothing happened. So same thing with, Abenomics and stuff. I mean, you need more than just pumping money into the economy. You need the money to perform. Okay, why did the Fed let this happen? Oh my gosh. If I tell you this, then you're going to know, and then I'm going to be useless. You won't love me anymore. All right, so let's say $2 trillion times 10, because of the money multiplication process, becomes $20 trillion. What happens if $20 trillion enters the U.S. economy? Or deflation. What? $20 trillion. It would be hyperinflation. The dollar would be worth 50 cents. Wouldn't it be weird? The dollar is worth 50 cents, even in dollar terms. It would just be ridiculous. Absolute hyperinflation. Interest rates would need to go to like 20%. It just, wow. that's not really what we're looking for, is it? See, Mylan says bring down the value of the dollar. Honestly, America doesn't care about that. In fact, America would want that. Who cares about a weak dollar? It just sucks if you want to go vacation, but if you're filthy, stinking rich because everyone's got money, then who cares, right? Put it this way, America is the only country in the world in which its debt is in its own currency. Do the British owe debt priced in pounds? Who do they owe money to? Themselves? Who owes themselves money? Right? And obviously they owe somebody else the money. But in the United States of America, if your currency falls by 50%, so does your debt. Nice. So who cares? So anyways, for Abenomics to work, the government should have gone in and say, like me, I'm the new Prime Minister of Japan, Wayne McDonell. And I come in and I say, all right, business community of Japan, now hear this. Increase your wages by 1%, save 1.5% in taxes. Increase wages by 10%, I'll lower your taxes by 15%. What happens? People start making money. People start putting, they start, let's say, putting money in the bank because they have more than they need to spend because now they're making more money. That gets lent out to others that have opportunities for the money, but that goes through the multiplication process. So for every dollar in, $10 comes out, not just increasing the money supply, but increasing monetary activity, which then creates more jobs and higher demand for skilled workers, which puts up wages even higher. And suddenly, bada boom, bada boom, bada boom, bada boom, bada boom, bada boom. That's the factories in Japan. They're pumping. The economy starts getting strong because they have wage growth, which will increase spending, and then suddenly you're making tons of money, so you want to get a bigger apartment, and so on and so forth. So elect me, Wayne McDonell, for Prime Minister of Japan. I will fix it for you. I got some crazy ideas from the United States, too. Yeah, so Vikram says U.S. economy not better than last year because the money is still at the Fed. $1 billion actually hasn't left the Fed because the Fed gives it to the banks and the banks immediately turn around and park it at the Fed. It's never left the Fed. You understand? But the banks that were sort of in short-term cash flow had balance sheets that were balanced. Excess reserves sitting at the Fed. We're good. And then everyone's going to worry about, well, how's the Fed going to reduce its balance sheet? Well, they're just going to sell it back to the banks. And then the excess reserves will come out of the banking system, and everything's normal again. Banks will be holding these bonds. The government will pay them the interest on that. And then the bonds will mature and the bonds will go away. And 10 years from now, or 30 years from now, it'll all be gone. You won't even notice it happened. Right? Somewhere right now there's a college student who's going to be Fed chair one day. He's going to be chairperson of the Board of Governors at the Federal Reserve Bank in Washington, D.C. And he's just He's learning about this thing that Bernanke did. It's not even going to be like a real thing 30 years from now. So anyways, how do we get onto these things? I got to get going, yo. So Japanese yen, weak, weaker, 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 weaker. Seems like, yup. So that's good. It's very good. Anybody buying the yen? Look at. Anybody buying the yen? Not since June. There was a little blip in June. June. Okay? Now you know. Make sure you're doing the right thing, guys. Let's go to Aussie Dog. Price has gone up a little bit, not this week, but last week. And yet, okay. Don't believe it is what the charts are saying. No change in long positions. Really, no change in short. So I would say mission's still on, right? That's all. No reason to change. Kiwi. Okay. Less and less people short, guys. Isn't it interesting? Less and less and less and less people short. Well, Igor, why have I been talking about cornering the market in New Zealand dollars starting next week? I mean, you guys have heard me say this, right? What, 7, 8 times? That I'm going to look to start cornering the market? Well, according to this, I'm not the only one staring at the sun. Yeah. So at least now I can talk. I can talk intelligently to my investors and say, well, I've been reviewing the large speculative positions in the marketplace, and hedge funds are building are getting ready to build a long position in the New Zealand dollar in anticipation of positive yield differentials. Nice. You so smart. I'll give you your money. Here's my money. You're so smart. Okay. What's going on here, kitty cat? Down, right? Going down in a burning ring of fire. Yeah. Short positions. Look at more short, 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 more short. Pause. And we know that pause was right around the 130 area. And we're already up at 130. What are we? 132? 131.50? So we're already higher than this, but not higher. We're not there. So we're back up to kind of just a little higher than we were. More short. And that's not easy to say 20 times in a row, is it? More short, more short, more short, more short, more short. Yeah, but we topped off on the midpoint cycle, Kareem. 131.50. So that's that. Interesting stuff, huh? Don't you love to be currency traders? I love being a currency trader. Good stuff. It's going to be an interesting week. The calm before the storm. By next week, even the Europeans are going to be ashamed of their long holidays. And we'll have to come back and get back to work. Okay. What do you think? Should we care about this? Yep. Australia. Okay. Okay. Meeting minutes out of Australia. UK CPI. Well, look, if you're interested in buying the pig, the Great British Pound, a good number here, in fact, a positive number. It's so funny, right? Look, if we get 0.3%, that'd be fantastic news. It's so funny, isn't it? Oh my gosh, 0.3% inflation. Holy smokes. It's so ridiculously small, but way better than we got now. So anyways, a little, just the slightest positive news would lean closer towards the UK raising interest rates next year. Building permits, look, we know we're on a decent trend here. Can't be that important. CPI, yeah, look, we're looking for a better number than expected, right? We're being killed by energy prices being low. Usually energy prices are high, so you would use core. But now we want to know what's going on with oil. But oil's still down, so headline number is going to be low. Okay, we're going to miss. So in this case, you want to look at core to take that out to see if the rest of the economy is improving. Okay. Now, meeting minutes on Wednesday, very, very, very good stuff here, because the $5 trillion a day question is September or December, right? SEP versus Ds. That's the $5 trillion a day question. So those that do this will be reading the FOMC meeting minutes. If I were you, I would actually download these meeting minutes and actually read them. Oh, Wayne, I want to be a millionaire, but I can't do that. That's too much work. That's ridiculous, Wayne. All right. But if I were me, I would read those meeting minutes. I don't think you're going to learn anything. I don't think they're going to say September or December, but it's your job, yo. And if that bothers you, like, oh, I can't be damned to do that, you may not actually be a currency trader. You're a sheep in wolf's clothing. So I think you should, just because you should. Because you're an expert, because you're a professional. Just so you can tell your clients, hey, I was reading the FOMC meeting minutes, and I saw something interesting. I want to send you this quote. That's what you do if you're a professional. Hey, Mr. Client, I was reading these Fed meeting minutes, and something came up, and I was thinking of you. I thought you would find this interesting. All the best, your money manager, Wayne McDonell. I mean, that's what you do, right? At least I would hope so, right? So anyways, so read it. Just so you can sound smart. Okay, great. Retail sales, cha-ching, we want a good number out of the pig. Unemployment claims, who cares? Philly Fed, yeah, Philly Fed can move the market. It's not the biggest deal in the world. Why? Because we're not interested. We're too focused on SEP versus Ds. Okay? we're gonna, we're gonna get a bad PMI number out of China. Sell the Aussie. That's the general idea. The French, nobody cares about the French. The German numbers, well, okay, we want to see the quantitative easings working, right? So I don't know. We don't want to see a bad number. So maybe a blip for for a half a day on the euro. All right, Canada is in a world of hurt. Does anyone expect good numbers out of retail sales and CPI? No. But, I don't know. Maybe even start selling that now, right? And the week strong. Like, is the Aussie mean it's going to raise the value of the CAD? What do you think the Aussies are talked about? How awesome the economy is doing, or how pathetic the economy is? They're talking about how pathetic it is. So if Aussie says their economy is pathetic, and they're going to blame China for that, how do you think that's going to affect Canada early in the week? Okay? You see what I'm going at? And then when China releases pathetic numbers, is that going to be good or bad for Canada? And based on those two things, what likelihood is Canada going to get good numbers on Friday? Is it even possible? Yes, Jimmy. They're all commodity currencies. It's all the same thing. Okay? So if Aussie and China report bad numbers, there's almost no reason at all for Canada to report good numbers. So I would say down with CAD, right? Then I'd say down with CAD. And then I would say down with CAD. All right, that's why we go through the calendars, guys. Sometimes I go through this and it looks obvious to me. I think you know, but if you don't know, now you know. Just ask, okay? Is that cool? We're all on the same team, right? You are not alone. I am here with you. Though you're far away, I am here to stay. You are not alone. Nice. Alone. Big finish. Alone, alone. Oh my. All right. So here we are. Today's the 17th of August. And we have 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. On the first page, there's 12 trading ideas for today. Have you read them all yet? Here's YJ. YJ looking for a breakout. Daily pivot point, weekly pivot point, monthly pivot point. Oh, snap. Very good, YJ. And by the way, the website's built for you to read on tablets as well. Did you ever notice this? So you can actually right swipe these if you're on a tablet and just go to the next trading idea. Isn't that cool? Cool. So that's forex.today. You want to do some technicals? I mean, that's not bad, guys, right? There's at least a dozen trading ideas for today. At least a dozen. Yeah. So every day they're posting trade ideas. We have a good analyst team. Cool. Huh? They work for you every day. Cool. Igor. Igor. Don't, you're going to make the other boys cry. All right. All right, let's do some technicals. Like I said, very, very tricky trading conditions. And don't be don't be upset about it. Just accept it as it's just like that this time of year, and that you just need to A, recognize it, and B, adjust for it. Okay? So either drop into a super small time frame and scalp, or back out a little bit and sort of the bigger swings, right? Is this what's happening? That's what you have to ask yourself. Okay, if it made a lower low, it should make a lower high somewhere between 382 and 618 Fibonacci retracement, right? So pick your line. Dollar index still falling pretty hard, guys. But on my other trading computer, I have we just hit a daily central pivot point 382 Fibonacci retracement. But I think one of the reasons why my setups are slightly different on the other computer is the way that it's measuring Friday, and I think it's including some of the Sunday open, and it's screwing up some of the entries. And I've adjusted from my coaching PC, and that's why they're different. So when I say it's a pivot point and a 382, you're probably scratching your head saying, "Hey, ain't a 382." And yeah, you're right, it's not. But if you throw in Sunday, it is, and that messes things up. But nonetheless, ask yourself, and I know we do this every day, but apparently I need to do it, right? Ask yourself, are you a bull or a bear? And if you believe this is bearish price action because it made a lower high relative to the previous high, and it made a low lower than the previous low. So therefore you say this is a downtrend, and somewhere in here it's going to fall and then make a new lower low. That if you assume it's going to make a new lower low, then you're assuming a continuation of an existing trend. Okay? That's where you make your money. Throwing down trades is not how you make money. It's usually how you lose money. So if that's what you think is happening, and you can describe it and discuss it intelligently, then you should be able to trade it. and you wait for things like the conditions you want to pull the trigger in. Okay, you want to kind of get this elevated, and you want to hit a good number. Where's the midpoint psych level? And it's just way up here. It's basically a 618. So here's what I would probably do if I were me. I'm thinking here, midpoint psych level, high minus 382 is a 618 of a low. So my general thought process here is here to here. So the closer I get to that, the more I need to drop into a small time frame. Because look, if we go up to this area here, and then it comes down, what will the oscillator look like? The oscillator will look like this, and then it'll roll over. Okay? So I'm already assuming it'll roll over if price comes up here and then stops making highs, because that's what the oscillator is measuring. So once we get close to this area, I'm going to get out of the 15-minute because I already know what's going to happen. I'm either right or I'm wrong in that situation. So now I'm going to drop into a 5-minute and look for the similar proper setup as close to the midpoint psych level as possible. Pull the trigger, because if it comes down, then I actually pull 2 time frames down, the 5-minute and the 15-minute. And I win. And then, of course, most people break even on that trade, right? Because what happens is it comes down here, you jam your stop at break even, price comes up, knocks you out, and then it double tops and drops. So if you already know that's going to happen, take your profit on the first swing and then short the second swing. You're welcome. Let me adjust this, because that gets messed up when I go to the 30. Okay. Another shot here is the exact same thing, but it's going to go off this line, the 382, or this line. I guess this 618 is basically a 50%. I just don't like selling 30s and 40s. It seems like a weird place to sell. So where are we now? 20? You know what? You know, this 3 would actually be it, guys. Now that I'm throwing in some prices, I'd rather be short at 20 and go for 80 than short at 40 and go for only God knows what. So this looks pretty nice, man. I wonder if this is going to roll over. I'm thinking it out loud here. That might actually be interesting. So now would be the time to look for the reversal. My target would be 80, so don't make a big deal about it. And because it's a 50%, maybe it will go lower. So let me put it all together and we'll wrap up. So if the 50% holds, my target's probably going to be this level here. So that means what? It means up to here, from 20 to 80. So where's 80? 80 is about here. Lower high, lower low, to 50, and it's going to come all the way back to 80 again, and then it's going to come down to here. Okay, so there's the next 6 hours of trading. You got it? Cool. Peace on earth. May the pips be with you. May your profits be above average. I know we didn't do a whole lot of technicals today, so we'll do a whole lot of technicals tomorrow. Same time, same place, 7:30 in the morning. Thank you to Forex.today for hosting. My name is Wayne McDonell. I'm the Chief FX Strategist for TradersWay. Hopefully, my training will lead to your success. Your success will lead to your confidence. Your confidence will lead you to open a live account, and hopefully you pay it back. and say, I want TradersWay.com to be my prime broker throughout my long and successful and profitable trading career. I'll see you tomorrow, guys. Thanks for being on my team. I appreciate it.